Good morning, Green Room. Wow, this market is bulletproof, man. Wow. Amazon got cracked. Google now down. Think about the same. I think Amazon was down, about 27 when it reported. It was down pre-market. Google here is down about 25. It was down more than that pre-market. It was actually under, I guess it was under 1,100, if I remember correctly. Anyway, Intel gap down big. Market ignored that. It's just bulletproof. Nothing's going to take it down. And, our internals are saying, be careful here, but not a single real crack in this market yet. And the beginnings of any crack just start with a move and, of course, a close under a prior day's low. And we don't have it. We do not have it. It was one close under a prior day's low. Right? We had another, and they're just ignored. And the market keeps pushing higher. And now it's coming. The NASDAQ futures here are coming up into this major resistance area and the 200 MA. We'll see. So just like a prior day's low is our first reference point of support, prior day's high is our first reference point of resistance. And each day we wait to see, does the market begin to trend in one direction or the other? And while we look at a longer time frame and say, oh, yes, the trend here is pushing up toward major resistance and the hourly trend is making higher highs and higher lows, we then wait to see, looking at the pre-market data, whether it makes another higher high based on that prior day's high or a low. And that can begin to give us a starting bias for the day as to which way that goes. We also use the opening price, and we just do our step-by-step analysis. Yesterday, the markets were chopping down, and in the morning, first thing, there was this wild whippiness that went back and forth for about the first, I guess, maybe 20 minutes or so, and then off it went. So we'll see. Right now, it just looks like it'll continue to push higher until something changes, and that would be a close under a prior day's low. And as prices get closer to an area of price resistance, it just makes more sense that a move under a prior day's low would be more meaningful than if it happened before that happened. So as we look at candlestick patterns, and call it whatever you want, we're not interested in the names, but let's just say a big bearish bar after a big bullish bar. Well, where did it happen? As this one happened here, that was meaningful. So we're paying attention to the location of events, as I like to call it, something meaningful that happens as a reversal. And then that suggested it would pull back. It didn't. Rather, it corrected through time. Right? It went sideways versus pulling back through price. And then we had another red bar here. It didn't close below the low, but nonetheless, it moved deeply into the green bar. It ignored it, and it continued to move up. And we see the S&Ps here making a higher high already. Qs are not, obviously being affected by Google to some extent, but not that much since it's still up. And those S&Ps are coming in on that 200-day moving average. Everybody knows that it's there and paying attention to it, looking at, the S&Ps. This is what would be quoted in the media. And I said this probably a week, maybe or more ago, was that, possibly, and I was thinking of talking to the Dow at the time, was that a move above that 200-day moving average and close above it may coincide with an actual meaningful reversal in the broader markets, since the media is going to pay attention to that with a close above that 200-day, since it hasn't closed above the 200-day in, I guess a couple of months or so, where it started to break down from. And here's the Dow actually above it, and a close yesterday just about at the top of the range. So I always take note of that during an uptrend, is that as prices are trending up, it's kind of a way of looking at a picture that provides, what is that saying that climbing a wall of worry. And as we look at candles, I look at that as little topping tails, not actually, full, would meet the definition of a topping tail of, the body in the lower half, and then, having a tail extend above that. And so as you see prices move up and you see the small tails at the top, that one closed at the high and it was up at this resistance area, and it continues to go up. You get these little tails, little tails, little tails, little tails, right, and little tails. And then near the end of the move, and this may, as I said a week or so ago, this may actually accelerate up into this area here, into this void, and you don't see the little tails anymore, and bars start to close near the high, is where here's this ultimate confidence of buying right into the close. And it's kind of like, when we use our internals, it's also another heads up that there's a lack of fear or reservation as to the market continuing to go higher. So it's something to keep note of, whether it's a market or a stock. It's just something that I've seen over the years, that near the end of a move where there is this disbelief to some extent that the market should not go higher, or a fear of it turning down, that fear is gone near the end of the move. So we'll see where this goes from here. Qs, right, close up near the high, 200 up above there. Russell, right? These have the look of a trend that wants to start to accelerate near the end of the move. So when you see price acceleration at the beginning of the move, it suggests continuation. When you see wide range bars, that's the beginning, the start. When you see wide range bars and acceleration after a period of trending, it is pointing out that it's near the end of the move. So this is what we'll be looking for, that kind of price action that would be in alignment with our internals that have already reached a bearish extreme. And as I wrote in Monday's letter, these internals do not give pinpoint accurate turning points. They give you a heads up. And then it tells us that the price action, such as this kind of price action, if it was to occur in the next several days, it would be much more meaningful than times where the internals are not in alignment. That's the Dow ETF. Transports bringing up the rear. That's what they did last year. They played catch up, and this looks like same as the others, like it can continue to go higher. And it's up a little bit here pre-market. Dow futures, right, beginning to push higher. There's nothing to stop them at this point. Meaning, as it's coming up into this void area, there's no resistance other than over here. Right? None of this matters anymore. It's been dealt with. So ultimately, this is the high point. It doesn't mean it has to get there, but it would make sense if it ran up there with that, vertical kind of a move where it begins to accelerate higher in a range expansion bar, and basically everything would be coming together for a short-term top. And so we're waiting to see if that actually plays out. And that's, the bullish, this is bullish price action. When you see prices run up like that, accelerate, and then, the technical analysis 101, what was resistance becomes support. And that's the reference point. And as it comes down there, it began to chop around, and then it's pushing higher. Right? So the only way to interpret that is just being bullish price action. Buyers are in control. And unless at a minimum, you got to close under a prior day's low, the assumption is it's going to keep going up. The bars part, no. So over here, Tony, I covered this in the MTS course, the swing course. to understand support and resistance. And so why is it meaningful? Well, after seeing price action like this many years ago and thinking about the way technical analysis is explained even to this day by the majorities, I was like, how is it possible that what would be perceived as being a large area of price resistance can be totally ignored? Like it's not even there. So, after not taking trades or looking at situations like that, and now said, what is being communicated as fact by these so-called experts has a big hole in their theoretical. And so I needed to come up with a rule. And so the rule was, if prices traded up and above, and this is close enough, and below, my rule was, for interpretation, to try and be systematic about it, it's been neutralized. Forget about it. What is meaningful is what directly to the left. And that explains how price action like this can occur, especially when market internals reach an extreme. And now, as they were here, and now as they're coming up here, they've given a bearish heads up, but we haven't gotten the price action yet to do it. Sure, but I'm going to take a look at, I can look at the euro here. Let's get through this. Bonds, just chopping around sideways here. Nothing going on. Oil, pulling in a little bit, grinding up. It's got room to go higher. So within an uptrend, there is corrective action. And so we'll see, does it break down? And you know what I'm going to do, just in case there's some bigger move here, just set an alert and set an alert up above. Yeah. And gold just hanging out here, just waiting for whatever it's waiting for. But within an uptrend and bullish price action, meaning it accelerated, wide range bar through the highs, and now pretty, well, let me add something here. This is bullish. There's no doubt about it. But as it's pulling back, this shallow pullback is communicating that traders are bullish and expecting this to go higher. I don't disagree with that. However, when you get a shallow pullback like this, it's another way of saying that bullishness is beginning to reach an extreme because it's not pulling back very far to where most would want to buy it, say, a little cheaper. So you have to be very, well, we're always careful, but the point being that when it's so close to the prior high, there opens the greater possibility of becoming an M top, so when you buy here, let's assume that you do, right? And we would wait for it to trade above a prior day's high or prior bar's high if we were looking at a 5-minute chart. Patterns are universal. It better blast off through that high, because if it stalls there, you have a lot of traders that start to get nervous, and that's what creates an M top, and things tend to fall apart at that point. All right. I wanted to look at the euro here, which is just a mess. It's a mess. It's been in a downtrend for a while. You can see the 200 MA is declining. You can see the 20 above the 50. We talked about, why do we look at moving averages yesterday in the room? And I said, because they're visual aids. So what do I see here? By the 50 being above the 20 being above the 50, there's been some improvement within that downtrend versus what it was over here, where the 20 was declining below the 50 and both were declining below the 200. So now there's been some stabilization. There's been this little 180 breakdown failure, and prices are consolidating at this resistance area. And so now, of course, the question is, what do you do here? Well, from my point of view, you don't do anything until it proves itself. Now, does this pull back here? Let's change the color. I mean, you're seeing a little buying here as it traded under the prior day's low. You've got selling up here. So what you have is, right, and this is typical of a bottoming type of price action, is that it clears resistance and comes all the way back down again. And now it's reversed. And so there's buyers down here in this support area. Here, sellers came in at a lower level, a lower high level. So trend line traders that would, they connect the dots here. They're going like this, looking for, this declining resistance, which is subjective. And they might be doing this. In other words, what's happening here is sellers are coming in at a lower level, buyers are coming in at a higher level, and the difference between those opinions are coming together to an inflection point where it's going to break one way or the other. Now you have to determine with your best guess as to the direction that it's going to break one way or another. You could do that through looking at multiple time frame analysis, which would be the best way to do it, see what the trends are. And, since this is a currency, you might look at what's going on with interest rates, in different countries, which have an effect on currency. So right now, I would be waiting to see which way this is going to break. The theory is that the closer it gets to the apex of this contraction in ranges, the more likely it could be to be a false move. But right now, buyers and sellers are battling it out, and they're getting tighter and tighter here. It's just suggestive that it's going to break soon, one way or another. So there you go. With that being said, I turn it over to Dan and go through positions and some gaps.
Yeah, I just typed there that could be a condor candidate on FXE, and then you just know that you're going to adjust it whenever it decides to break. So as long as you don't get a big old gap against you, you're selling time. Opens, here we go. Tandem, covered call, looks great. BMY gapped against us. We tightened the stop yesterday, so we just got to manage it. Dollar Tree, we have a covered call. That looks great. NBEV, covered call. AMD, covered call, and it's gapping down today. But it's a longer term trade for us, and we have a covered call. So nothing to do. LVS, we have short naked puts way out for March. Weight Watchers has not triggered yet. It's under the base. WWE, we're long stock. And it's light volume, but hopefully it's gapping up there. 83.12. Twilio, we have a covered call. KSS, a bear call credit spread. Penn did not trigger. It gapped over the high. They gapped over the entry, and then we use the 5-minute high, so it has not triggered. Costco, bear call credit spread. Urban, short stock. Zulu Sierra, long stock, and a bull put credit spread. GLW did not, I didn't do anything. Look at this Whirlpool. That's a beautiful 1, 2, 3. I'm going to put that in a window. And the options were too spready, so if we trade it, we'll probably just do the stock. And IBB, we have a bear call credit spread that we're having to manage. Amazon did not trigger as a bear call credit spread. We didn't get the credit we wanted. It's actually setting up here for a day trade long. See this gap up to resistance and going sideways? If it can hold this strength and go sideways, that's a beautiful 30-minute high day trade. Look at Cron here in the bottom right. I put in a window. And I was hoping, look, it had a little bit of a morning strength here. And I was like, good, we may get our lower high now. And now it's taking out this pivot low. So you know, we were stalking that woulda, coulda, shoulda yesterday. Let's look at some gappers now. Those are all our opens. Glue, 920, a very bearish gap.